Good afternoon. Thanks for joining us today. We have Gold Terra presenting. Before we get started, as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And we will have a Q&A section at the end, so feel free to input your questions in the Q&A box at the bottom of your screen. And with that out of the way, I'd like to welcome my good friend David Suda, CEO, and Gerald Penneton, Executive Chair of Gold Terra. Hi, guys.
Good afternoon.
Nice to see you again.
Yes, thank you very much, Deb, for organizing the webinar, and we look forward to share the news release that we put out yesterday morning.
It's an exciting
David, would you like to say? Yes. David, would you like to add something before the introduction, or keep it for the end, or?
No, I'd just like to thank Deb again for having us back. It's not too long since we were here, and we've got a very exciting new message. So we wanted to get back as soon as we could to tell them how excited we are about the resource that we announced yesterday and how we plan on building on it. So I'll leave that with you, Gerald, to walk the audience through.
Well, thank you everyone for attending and joining the webinar on Gold Terra updated resource that we did yesterday. This resource update was in the making through our 2020 drilling program. We did approximately just over 9,000 meters of drilling on Samoto last winter, about a year ago. And Crestarum was drilled during the month of August to October. And of course, these two drill programs combined were the follow-up from our November 2019 resource that we did. Back in November 2019, we released a resource of 735,000 ounces of gold between mainly the Crestarum and the Samoto project. Both deposits were open in all directions, and so we decided to do a program in 2020 to increase the resource, which at the end of the day increased from 735,000 ounces to 1.2 million ounces. As you can see on the table in the presentation, maybe David, you can show us the presentation and slowly stop at where the location of the deposit are. So the update resources mainly was from the same four deposits: Mystical, Samoto, Barney, and Crestarum. Both deposits of Samoto and Crestarum were drilled, as I said before. And of course, this increase of 64% is quite significant for us because it adds ounces to the base that we have. We also, through this, increased the Crestarum open pit. And I think if you look at the last slide, just below, where we used to have about 129,000, 6,000 tons at 9 grams, we now have more of in the order of approximately 91,000 ounces in the pit, still at a very good grade of 6.17 grams. I don't think the cutoff grade is useful in that matter, but basically, Crestarum is right up to surface, very easy to mine. There's an access road actually directly from Yellowknife that takes you only 15 minutes. So we see that resource and those deposits as very good to be incremental to our success that we want to have in Yellowknife on a high-grade deposit, which is our target on the Campbell Shear. So for having a base of 700 moving to 1.2 million ounces at a grade of 1.54 gram overall in town with infrastructures is quite of a significant improvement for our balance sheet and for what it can bring as incremental ounces onto the project. We have no drill program planned for 2021 to expand the resource on those two deposits. We feel that those two deposits will bring enough ounces for now into the picture. And as our focus this year is on the Campbell Shear south of the Con mine, we feel that these two deposits will be probably part of a small drill program next winter to expand the ounces where the directions are open. For Crestarum, it's near surface, both to the south and to the north. And for Samoto, the ounces will be able to increase further north and at depth where the deposit is still open, which also could be tied in with the Mispecol deposit. So when we go back to the previous slide, you look at the location of those deposits, they're barely half an hour driving out of town of Yellowknife. They're very close, but they're not big enough to sustain an operation on their own at this point in time. We feel that we need to reach 2 million ounces plus, be able to justify, say, a pre-feasibility study or a preliminary economic assessment to justify showing the economic of those deposits. We feel that if we are chances on the Campbell Shear, which is south of the city, where we're drilling currently, can bring 1, 2, or 3 million ounces of high-grade material, the two deposits of Crestron and Samoto will be great incremental ounces, satellite deposit to a bigger operation that we intend to find south of the city. With this, I think more question could be arise when the technical committee or the technical report comes out in about 30 days from now. We should be able to have maybe a seminar to discuss more of the terms and what it implies. Unless, before I move on to the Campbell Shear, which is our current target of drilling, you want to talk. Not sure if you want to open the panel for some question or you want me to just go on to the Campbell Shear.
I think you can move on to the Campbell Shear, Gerald.
The main reason, as much as you probably know, we raised about $2.9 million about a few weeks ago. We closed, I think it was last week. One of the important thing about this press release that we resource update is the fact that we drilled last year, we increased the resource, we were successful, we got 1.2 million ounces. We'd like to get these two deposits over 2 million ounces, and it will require more time. In the meantime, we negotiated an option with Newmont, and in September, we announced this option that was successful just south of the mine, and that's where we're drilling now. But what's more important is that one buyer bought shares into the company about a few weeks ago when we did the one financing, the flow-through financing. And behind this flow-through financing, there was only one buyer. And what's important about this is the fact that we believe a lot in the story of the Campbell Shear and the development and the discovery of multi-ounces deposit of high-grade nature in the Yellowknife camp. As probably the people have known from looking at the Yellowknife story for many years, because I just joined about a year and a half, but you know very well that a mining camp, a gold mining camp, can always have a lot of potential, and you can find a lot of gold in small deposit. But at the end of the day, there's always one big gold deposit. And what I would like to talk about is the Campbell Shear target. And that's what attracted me into the Gold Terra story. We're very happy with Crestron and Samoto, don't get me wrong. These are great incremental satellite deposits, but they're not big enough or rich enough to sustain the development of a mine on its own. And at first, when I joined the company, I joined because of the Campbell Shear. It took a while to get the Newmont deal. And of course, we now are drilling just south of the mine. And I want to spend some time on this because you may have some question on the resource, but I would like you to understand that the bulk of the success of this company will reside into Campbell Shear, which produced 13 million ounces of gold over a stretch of about 7 kilometers of strike length from the Campbell Shear, a shear that is sometimes 50 to 200 meters in width, with systems that are anastomosing, pinch and swell, but it still generated that 13 million ounces over 7 kilometers down to about 2 kilometers of depth. And what's very important when you look at the combination we've done, which is the next slide, you realize that the long section that is shown here is exactly the expression of a 5 million ounces deposit that started roughly at 400 meters depth and continue up to 1800 meters depth. The deposit is still open at depth and also to the south. More drilling needs to be done at greater depth, but because there was already two resources near surface, Yellow X and Can Point deposit or zone, that were outlined 30 years ago, it was very important for us to get at least a piece of that ground to the south before drilling onto our south belt, which is immediately adjacent to the south. Now we control roughly 20 kilometers of the Campbell Shear south of the Con Mine. We have access to a lot of very good success drilling that has been done in the past. As you can see on the slide that is shown on the presentation, you have numerous intersection, 14 grams over 5 meters, 4 grams over 7 meters. The question is not, is the shear there or not? The shear zone is there. The Campbell Shear carry on for kilometers to the south and kilometers to the north. The potential has never been really well tapped. Some effort has been done in the past by Cominco Exploration back in the 60s, all the way to Miramar in the 90s. But those have given some very good incentive to go back. For example, there's an intersection at 600 meters of 3 grams over 13 meters in old MY1, which was done actually before Miramar and never follow up again. And we know the deposit and those zones extend to depth. Archean deposit, the beauty, it goes from surface to 2 kilometers, 3 kilometers, but it's important to find the answers near surface because they're much cheaper. And that's what we've been doing. So the first pass of drilling that we've done on the Campbell Shear, which is the next slide, is roughly from surface to about 500 meters vertical, below the 2 deposits, which are the Yellow Rex and the Camp Point. And don't forget that to the south, there's another deposit, the Camp Point South zone, and another 20 kilometers of Campbell Shear that is untested. That will be the focus of our next winter program. At first, we needed to spend the money on the Newmont claim because we are earning an interest up to 60% on those claims. But at the same time, to learn about the Campbell Shear just south of the mine. And some of the results will be shared with you. We started drilling last fall. We had 2 holes, and then we drilled approximately so far 12 holes this year. We started at the end of January. Usually it takes a week for a hole, a week for getting the sample sent to the lab after the logging is done, and of course 6 weeks of waiting time to get the assay result. We're just about to start getting the result out, and it will be very important for you investor to spend or just put a note that some more result will be coming. We decided yesterday to put the resource out because it was important. This is a milestone. At the same time, the next milestone will be our result on the Campbell Shear. And with this, if I don't want to be talking for too long, I've already been talking for 10 minutes. I'm not sure, maybe I prefer to have you guys have some question and answer. We'd delight to answer them. And yep.
Sure. Yeah, let's do some Q&A. So the first question from the audience, Gerald, is you guys mentioned in a past interview that you completed some assays on the Campbell Shear at the end of January, and that results would come at the end of February or early March. Can we still expect to see those results soon?
Good point. I guess 2 holes were drilled before Christmas. And if we said that the result was supposed to come by the end of January, it's kind of like maybe it was the Crestarum deposit drill result that came all the way until the end of January. But it's possible that the 2 holes that we drilled in November, at the end of November, early December, came sometime in the end of February, and they're just about to be released very shortly.
Okay.
The 2 first holes are not the best hole that we've drilled because we were drilling at an angle. If anybody can see on the map currently where we're talking about, we're showing the arrow where the first 2 holes were drilled. We were waiting for our permit to access the Newmont claim, what we call the land use permit in Yellowknife. It's an application that usually takes about 3 months. As soon as we did the deal in September, we got the LUP, and now we are basically drilling where we wanted to be drilling. You can see all the traces of the hole, and you should be aware that some news will be coming over probably before the end of March on drill results. So thank you for your patience.
Okay, and is the power that is at the old con site adequate for a future or a possible future mine? So just asking about infrastructure in the area, Gerald, and maybe you can elaborate beyond just power.
Yeah, there is a power dam called Bluefish that was built by Caminco in the days of Caminco starting the con mine. And it's interesting to talk about Caminco being the owner of the mine early on. It was then sold to a company called Merco, and then Miramar bought it for almost a song. Yes, electrical power for a small deposit for, say, a couple of thousand ton per day, 3,000 ton per day mill should be enough. We have to reassess the power capacity. Since then, the dam was given back to the government, and so we don't the property, the con mine doesn't own the power generation of the mine, the Bluefish Dam, but it doesn't mean we cannot again have access to power. Would it be enough? It depends on the size of the deposit we found, the size of the mill we build, and how much power is currently available.
And what other infrastructures in the area? I think one of the interesting things about this story is how close to a city you are with this kind of grade.
What is very, very important is we have the manpower and the knowledge of mining in a mining town with the service that goes along with the mining town. There's an access road from Edmonton all the way to Yellowknife, which is open 12 months a year. There's people. The electrical grid is good, but would it be good enough, or we need to update it? That's a possibility. There's enough water in the area. There's no question. You're at the head of the Great Slave Lake is a huge water reservoir, and at the same time, you have most of the infrastructure. You have an airport with service with Calgary, Edmonton, Ottawa, Vancouver. Pretty much all the service that you want to look for in a mining town, you have them. The only question, to be honest, it's that they're probably, depending on the size of the mill, maybe there will not be enough power. We'll have to have power. That's a possibility. But you're right. Being in town is a lot more cheaper. You know, for those who may know what I've done in the past, there was just a big difference between Detour and Denison Malartic. And, you know, I built Detour watching Denison Malartic being built as well. And I can tell you that it's a lot more cheaper to operate a mine in a city where everybody goes home at night than it is when you have to lodge people, feed people, transport people on rotation. You need probably 3 times more people at Detour than you need in Denison Malartic. So there's no question, operating in town is cheaper and better.
Sorry, how many employees do you currently have?
Oh, the number of employees is, we're an exploration outfit. So basically what we have is we have 2 geologists in Yellowknife and a technician. We are running, one of the biggest things that David and I have been able to succeed over the last 18 months is we brought the average cost of drilling from $275 per meters, all in, including people, assays, drilling, and everything else, to sub 200. Currently, we're drilling at $190 all in. And we have approximately 7 people working at Gold Terra, basically core cutter, technician, and 2 geologists.
Okay. Shifting gears a little bit, do you know why Miramar did not do additional exploration at the con site?
Yeah, I can answer. That's very, I know a few people at Miramar, and I've talked with a few of them as recently as last week. We're still in contact because there's still something to learn from the Miramar days. Miramar shut down the mine in 2001-02 when gold price was at the lowest, 250 to 275. Then the custom mill people, to the giant mine. The giant mine was shut down. There was no more mill active, and they custom mill some of the deposit as long as Miramar didn't took any of the giant. So basically, they shut down the mill in 205. But the Robertson shaft that was sink to 1,600 meters depth was basically flooded, or the pumps start pumping, I think in 201 or 202. And the main reason was gold price. If you remember, 1999 to 2001, the gold price was not in favor. It touched $256 an ounce in 98 and September 99. And a lot of companies shut down their operation. And it was shut down very abruptly. Exploration was shut down very abruptly. And the last time they'd been drilling was in the late 90s. And so unfortunately, quite a lot of people were surprised by the shutdown, because it's a high-grade mine, and a high-grade mine should always be able to survive through the time. And it's a sad thing. And then Miramar went on to working on Hope Bay Belt, and then Newmont bought Hope Bay Belt, I think, if I remember, 2008. And Newmont basically bought Miramar, ended up with the liability on the con mine, and finished closing the con mine and never spent a penny on the project. However, when I came and asked them to option the property, they said, "Oh, who's coming? The guy who will revive Detour Lake." I said, "Well, maybe we're going to be a little bit more careful here, and we're going to keep it back in right, and we're not going to let Joel Panettone get 100% right away." And so this is the story now. Miramar wanted to explore more, did not have the money to explore more. And when they bought the Hope Bay Belt, their money went there. So that's simple as that.
And how significant was the first or second hole at Con that appeared to show hitting the shear zone? And how has that affected your drilling plan and the new plan?
In Yellowknife, along the Campbell Shear, there is a lot of late faulting. When we drilled our first 2 holes before Christmas, we knew there was a risk because of one of those faults, the cam fault. The cam fault basically is shifting the deposit. And the map actually, which is right there, is showing you this. There's a cam fault that goes and shift the red line Campbell Shear to about maybe 500 meters to the east, to the southeast. So there's a big displacement in the Campbell Shear. It's very well documented. When we did our first 2 holes, we wanted to get on the ground and learn about the Campbell Shear, knowing there was a risk. So those 2 holes basically did not intersect much of the Campbell Shear. And that's why they're, like I said in the beginning of the presentation, they're not very exciting. They have a little bit of the Campbell Shear, but we did not get through the package because we intersect the cam fault, and basically it was displaced.
Okay. And just talking about the geography, you're surrounded by 60 North gold mining. Would it not make sense to option their property in order to round out your land position?
We could, if we had an interest, increase our land position. You see, for many years, Terra X built up a huge land position, which is 800 square kilometers. And kudos to the team before, which is still involved with us, with Joe Campbell. There's no question that we have a tremendous package that can lead to many more discoveries on many more satellite deposit and small deposit, and maybe even better. But for 7 years, they neglected what is the largest gold plumbing system of the area, which is the Campbell Shear. The Campbell Shear is 100 to 200 meters wide. It is the plumbing system for all the gold mineralization on that side of Yellowknife. It may be a different system on the other side of where we have the ptarmigan deposit, the Angel Silver anomaly, things like this. It's the Banting Formation, which actually also hosts the discovery deposit from gold mining. But when you look at the Campbell Shear, being the largest gold plumbing system in the area, which has never been explored properly over the last 7 years, there was no question in my mind. And I've been doing 40 years of geology and gold mining. I can tell you this is where you're going to be able to find 2, 3, or 5 million ounces. If you want to find another Crestron, it's only 500,000 ounces or maybe 1 million ounces. Campbell Shear has the potential to find 3 to 5 million ounces. And it's to us to drill it, find it.
Okay, well, I think you just answered one of the questions, which is generally speaking, can you provide any forward-looking statements on potential increases in your resource? I think you
I cannot. I mean, it's open. The only thing I can say in terms of our resource update is that we did not close off the deposit. Our drilling is still showing that there's mineralization further north and at depth. So we have potential to increase. We just need to go and drill again next winter. Samoto is only accessible in the winter. It's a low-grade priority. It's a low-grade target, being a lower priority than a high-grade target like the Campbell Shear. And that's why it's not like it's on the back burner, but it's a second priority. The first priority is, think about it, Campbell Shear generated 13 million ounces at an average grade of 16 grams per ton. 16 grams per ton in today's world is almost $850 per ton US, over $1,000 per ton. We do mining in Canada underground for about $200 a ton operating cost. So there's a huge margin to go underground on a high-grade deposit. And always remember, and I know I've lived through that with Detour, when gold price drop, being a low-grade deposit, you're the first one out of the door in the investor portfolio. When you have a high grade, you have a better chance to be surviving. And that's why our target in Yellowknife is high grade.
Can you explain why Newmont didn't just go work at the Campbell Shear project by themselves?
Newmont purchased Miramar. The question's about Newmont, right?
Yes, Newmont.
Newmont purchased Miramar for the Haute Bébel project, which was then floated into TMAC, which we know what happened. So they never had an interest in reopening the Con mine, which was shut down. So they've never spent any time. And the people that I've dealt with Newmont have known that project for many years, but they've never thought that it was a target for them. And so they decided not to. But then our compilation shows that there's potential for maybe a couple of million ounces more, maybe even more. So we decided to make a deal with them, but their interest in working on the property was completely not the focus why they purchased Miramar. It was the Haute Bébel, in which they sank $800 million US after.
Okay, I've got another question just asking you to elaborate on Joe Campbell's experience in the area.
Joe has spent a tremendous amount of time with everybody. For example, we have one of the best social license in the Northwest Territory, with First Nation, with government relation, with the Mackenzie outfit for permitting. It's tremendous. We always look up to people who work in an area and are successful to so many aspects of it. I think the only thing that was not picked up, and I think Joe tried with Newmont to get the deal with Newmont on those claims before, and he was not successful for whatever reason. We're grateful that we were successful in 2020 to do the deal, and We're very happy to have Joe in our team carrying on and bringing a lot of history and experience from the area.
Well, getting that deal done has been, I think, a really big catalyst, and congratulations to you both for successfully executing that. I have a couple questions just around the treasury. I think since the last time we saw each other, you raised some capital. How much money do you currently have in the bank, and do you intend to raise more money in the near term?
We completed the year of 2020 after doing two financing in late 2019 and July 2020. We finished the year just under $4 million. And then we embarked into just about 10,000 meters of drilling. With our current cost of $200 per meters, Canadian dollars, we are very happy that we were able to, bring the cost down, being able to plan the program and finish the program of the winter with $2 million. What this last financing we just did of $2.9 million with one buyer is that we secure another 10,000 meters of drilling in 2021. So if we were in a position to be now, it's great because we don't need to raise any more money for drilling purpose in 2021. Unless we're very successful and we want to double, triple, or quadruple the program. But as of now, with what we have, we are good for all of 2021 to drill close to 20,000 meters of drilling on the Yellowknife target, mainly the Campbell Shear south of the mine. So our cash position now in the bank, I'm not the CFO, but it's good because you can imagine just under 4 plus 3, that's 7. We do say 10,000 meters, that's $2 million. So we're in good shape for another 10,000 meters of drilling in 2021.
Okay, great. Well, that's a great position to be in. Can you give us any background or understanding of the shareholder that purchased the last financing? Were they institutional? Can you categorize them at all for us?
A very good Canadian institution, very knowledgeable about mining. I've been a shareholder of Detour Gold, knows me very well, and very supportive in our target of the Campbell Shear. And for him, it was the turning point. For him, it was what we did, the compilation, the Newmont acquisition, the focus. That's what he wanted to hear, and that's what we deliver, and that's why he came in.
Great. Well, it sounds like you've got a good shareholder base. I have a question around what's the cost per ounce that you've found so far, and maybe you can also give us your cost per meter of drilling currently.
The cost per drilling per meters was a bit more higher 2 years ago. I think this was how they were working with the way they were working in Yellowknife. So a year ago, I went early February, just before the pandemic hit us. I went to review how the guys were working on site. I joined in November 2019. I didn't have much time to come in. So as soon as I was able to go up there, I was able to see how they work, and it's everybody has a different philosophy how they work. For me, working is about spending as much money in drilling and as little as people. So you need to be able, and I still remember my flow through years in 85, 86, 87, where my boss back then told me, he said, Gerald, it's okay. I mean, you can handle 3 rigs. So I had 3 rigs by myself with 1 technician. And back then the flow through were for 2 months, January, February. And that's why there was crazy drilling. And we had to do it. We had to pull it off. So I'm from a background where you can take more than you can. And so when I went to site, I didn't like what I saw. And I had to put my foot down in some directions. And the main reason is we brought the cost from $275. And I think the last time I had a weekly report on the cost, on the cash flow cost sheet, was we were down at $190 per meters all in. including everything. That means like building the ice road, the assays, the people, everything. So now we're very happy, and that's very important for us to focus on that. Someone asked me about the cost per ounce. It's very simple. We just increased by 500,000 ounces our Samoto project. We spend roughly $3 million in drilling, 15,000 meters times 200. And for $3 million, we give you 500,000 ounces more. So $6 an ounce. I think any company that finds ounces below $20 an ounce in terms of exploration cost is always very good. You know, you cannot, acquiring a company, you pay a lot more, but you pay for what has been done before. For us, we're in an area where we're going to be able to find ounces over the next 2, 3, 4 years, as long as the market is there to support us. And there's no question that we're in one of the best area in Canada with infrastructures and in a place which is very underexplored for whatever reason. And we can go over the reason why Yellowknife has always been not the target that Timmins is, Red Lake is, or Val-d'Or is, or Kirkland Lake. And for many years, Kirkland Lake was not the best target, right? Until somebody, I think it's Mr. Sutton, Mike Sutton, found the break on the other side of the fault. So there's always possibility when you're in the right place. And we are in the right place in Yellowknife.
It's all about jurisdiction, for sure. Gerald, can you maybe walk us through sort of the timeline as you explore and then, you know, take this into development? Like, how long do you think until you could potentially be talking about putting it into production?
Well, it's nice to have 1.2 million ounces. It's a great little base. Would I build a development on that? I think I said it before. I think I would be more reluctant. You know, my 12 years at Barrick, I was in school for 12 years. And it taught me that there's a threshold you need to reach. I mean, I put a small mine in production in Tanzania, which only had 600,000 ounces. But it was an open pit with 18-to-1 strip ratio. So I think if you ask me the question with the knowledge I have, the moment I find 2 million ounces on the Campbell Shear, high grade, underground, we will quickly move into, you know, 80% of the cost of a feasibility study is drilling. So the moment you demonstrate you have 2 million ounces, you can easily complete your feasibility study and your economic study and have a production decision very quickly. From then on, depending the size of the deposit, the depth of the deposit, the sinking of a shaft, there's many different things. I built Chilawaka from acquisition to first gold pour in 4 years. I did Detour in 6 years, from January 2007 to February 2013, which was a lot bigger and a lot more complex to do, with raising more than $1.5 billion just to build a mine. So it depends on the scale of the deposit, depends on the depth, it depends on the grade. But I think the threshold in today's world, you better have 1 to 2 million ounces of high-grade material in good continuity. Now what we have is 1.2 million ounces roughly in 2 deposits. So we can always increase those 2, but in reality, the cornerstone of a development to be successful, in my mind, I would like to have to be above 10 grams in Yellowknife, underground, and that's our target with the Campbell Shear. From then, the moment we have 2 million ounces, I would say that 3 to 4 years.
Okay, and going back to the resource update that you talked about at the beginning of the presentation, I have a couple questions on that. So first, the parameters that you chose are fairly conservative. Is your choice to be more conservative with parameters than some of your peers based on your mining experience?
Well, for those who've been in the gold business, I've been involved in this business now for 40 years, and we've seen gold price going up and down. The last resource in November 2019 was $1,300 gold. And I think when you lower down the cutoff grade too much, early on in the days like today, it's risky. It's overselling what you have, in my mind. It's better to be conservative at this point in time. Maybe gold price is above $2,000 an ounce, and we can change the cutoff grade and the gold price. But I think it's prudent. You're supposed to use 2 or 3 years moving average of the gold price. You cannot go more than for 2 years, and you have to be careful about the reglementation. And I think we felt very comfortable use $1,500. But at the same time, if you believe in 1,700, then it's even better for you because we're conservative. So we gave you the opportunity to decide of the upside, and we will find upside. There's no question. It's just that we want to take our time to do it. We don't want to do it on paper before it's really done. Mute.
I'm on it. It seems this resource update came up better than expected. Did the process of generating the resource update give you an idea of how to add ounces quickly if you decide to add that to your 2021 drill plans or development plans?
I think we can add ounces on Crestaurum in 2021, but it's not going to be a lot. It's going to be near surface, to the north and to the south. So maybe we can add a couple of 100,000 ounces eventually at Crestaurum on surface, near surface. The biggest improvement will be to Samoto to the north and at depth, and with the David's Pond deposit, which is next to it, and the Mispecol high grade. But these two, the Samoto Mispecol David's Pond area, which is further northeast of Yellowknife, is better accessible in the winter for cost purpose. If I want to go and drill it in 2021, it'll be at a cost of $300 a meter. I will have to use an helicopter. I will have to do this and do that. It's not a priority. The Campbell Shear is our priority. What I want to get is as many ounces of high-grade material, and whatever we can bring into the resource on Crestaurum and Samoto that we did yesterday, we will do it, but in a timely manner and economically manner, because we don't want to overspend for something that is less important than the Campbell Shear.
That makes sense. I don't see any other questions. So if there's any more questions out there, feel free to submit them. There's one that I accidentally skipped over from earlier, so sorry to jump around, but I'm just talking about other commodities. Is there any discussion of pursuing silver-focused exploration or reevaluating past silver discoveries?
It's obviously a very good question.
A bit more of a hot sector than the gold sector this year, so.
Yeah, I kind of agree with you that you can jump on the bandwagon, and I can see that's probably somebody that I know who told somebody that he knows to ask that question, so I can talk about it. But no one in Canada control a gold camp like Gold Terra. There's nobody that has a land position like we have in any of the Timmins, Red Lake, Kirkland Lake, or Val-d'Or camp, with a tremendous potential to find many gold deposits, more to come. I'm not even talking about Ptarmigan, a high-grade discovery, just on the other side of along the road. Like you drive on the road and you stop and you just can put the drill and drill. But it's a smaller target, maybe 500,000 ounces, 1 million ounces of gold. We do have some silver showing of a very, very, very good grade. One of them is Omer with lead, 20% lead. So we have to do our homework before I go back. Like I said, I only joined a year and a half ago. The company for 7 years before I joined was spreading its effort, its thin effort, in many different places, running around, showing after showing, after showing after showing. Not spending 1 second and $1 on the Campbell shear, which is the largest gold plumbing system in the area. So we're focusing there. And at the same time, we are compiling what's on the property. And when drill holes needs to be presented or a bit of effort to go and do some more mapping, some more compilation, we will do it to enhance the amazing potential. It is a multi-metallogenic belt. There's no question there's more to be found in that belt. We have 800 square kilometers. We do have some high-grade silver deposit, or showing, sorry, I should say, up to 4,000 grams. But at the end of the day, gold will always behave better than any other metals. These days, the main reason why silver was very important, it's because the ratio is out of whack. So people see an important correction in the silver ratio to gold, but at the same time, there's more silver in the world than there's gold. And if you want to carry the value of silver for an ounce of gold and do a 100 meters dash sprint, I'll carry an ounce of gold, you'll carry the equivalent in silver, and guess who's going to win? So I like the silver story. I like the lead story. I like them all because they have value. But we need to stick to be closer to town. It's cheaper to mine. And that's where the Campbell shear can yield 1, 2, or 3 million ounces of gold at high grade. And that's why I believe this is the strategy we need to do in 2021, probably in 2022. But we are aware of those high grade anomalies of silver and lead and others. It's not just the focus now, but what's the point of putting a press release to talk about them if we don't do anything about them? So we need to evaluate them and decide what we're going to do with them, and then we can announce them.
Makes sense. So how big of a workforce would be needed to develop and mine the ore reserves once things get into development and production? I guess he's asking how big like a workforce will you require if this was to go into production?
It depends a lot on the size of the mine. Today, most of the mines are mechanized. So everything is done 3 meters wide, almost minimum. And sinking a shaft, the construction period is always, I'm going to give you an example. When we were building Detour, there was 2,000 people working at Detour for 2 years. It took us 26 months to build. And we did it on time and a little bit over budget, but at least we did it on time. There's always, do you respect the timeline or the budget? It's always like a give and go. A mine that produced 200,000 ounces probably could run with 200 people. But the 200 people that you hire directly at the mine create 2 times the indirect job. So you create another 400 people indirect job in Yellowknife. It has a big impact. So during construction, if you sink a shaft to 1,000 meters, say, if your mineralization goes down to 1,000 meters, you do about 3 meters a day. So it will take you 1 year to sink the shaft to all the way down to 1,000 meters, just to give you an example.
All right.
I'm not sure if I answered the question okay, but it's very early to be able to put a number of people you're going to be working. I'm just giving you, from my experience, what I think it will run with. Usually a mill, you can run a mill with 15 people, basically, depending on what type of mill, the size, and everything else.
I think, it's hard to, like you said, it's hard to project this early out. Talking about size, you keep talking about 1 to 3 million ounces. Your deal with Newmont breaks at 5 million ounces. What is the probability of getting there, in your opinion?
Well, Newmont wanted to have a back-end right. because the deal was structured on a small portion of the property, the chances to get to 5 million ounces is quite small. In my mind, there is more of a potential to find on the Newmont claim option, the current option, 1 to 2 million ounces, more than 5. But I have a great potential to find 2 million ounces south of the Newmont claim, which is not part of the deal. So the good thing about the Newmont deal is that they have a back and right because they wouldn't do a deal without one. We get 60%, and then it's a 60-40 joint venture on the Newmont claim. And if we find 1 million ounces south of the boundary, it's 1 million ounces that belongs 100% to us. At the end of the day, my goal is to get as many ounces on our book to make the best decision to go in production. And the one thing that none of the company, and I've done it at Detour, so I brought Louis Dion, which I've known now for more than 27 years. He was my mentor as a mining engineer, being the senior VP operation underground at Barrick for many years. He was the Camflo mine manager under Bob Smith back in 1981-82 when Peter Monk bought Camflo mine. So Louis is my right arm. It's like my person, my mentor, my guy that will help us guide what is best for the company, how we develop it, how big it should be. And it depends how many ounces we're going to be finding on the Campbell share.
Well, I think you've both done a really good job of putting together a great team to advance this project. I'm really excited about the upcoming drill program, or the current drill program. And my question is, next time you're on my webinar, we're going to be talking 10 grams per ton. What do you think?
10 grams per ton is, 10 grams per ton is very simple. It's at today's, it's $600 US a ton. And underground mining is less than 200 US. So it's $200 Canadian. But there's a lot of money to do it with the 10 grammers over 3-4 meters. And history in the Campbell shear is 16 gram, and we'd love to repeat it again.
Definitely looking forward to seeing those results. And one more audience question did come in, just asking about the giant mine mess in Yellowknife. Do you think that this is negatively impacting potential investor appetite for Gold Terra?
I don't think it should. The giant mine is a very different mine than the Con mine. The Con mine was free milling with some refractory. The giant mine was 100% refractory. And it was a mess the way it was left with the bankruptcy of Wello. And now Canadian taxpayers are paying the bill to close it and finish the reclamation. It's a very sad story, but look, when I started Detour Gold and I was purchasing Detour Lake, there was 99% of no sayer in the market saying I will never be able to reopen this mine. So for years and years and years, the no sayer said, nah, he's never going to be able. And guess what? 16 million ounces, 30 years mine life, 600,000 ounces a year. No problem with the First Nation. In Yellowknife, yes, the giant mine is a sad chapter of Yellowknife, no question. Whatever we go back in the history and we heard about the union problem, about the explosion, about the closing, about the bankruptcy of Wello, it is not nice, but we're not giant. We're south of it, we're away from it, and it's not our business to look into it.
All right. I don't want to leave it on that note. So maybe I'll get you once again, Gerald, to tell us why you decided to join Gold Terra. I believe it was about 1.5 years ago now. What was it about this project that really attracted you, other than the opportunity to work with Dave Sudo, which is a lot of fun? I did it once.
Potential. I think David saw the potential when he joined almost 3 years ago. I did my due diligence in the summer of 2019. And I think one of the biggest thing that is left to be explored, in my mind, it's extremely underexplored, is the Campbell Shear. The Campbell Shear is your biggest plumbing system, has produced 13 million ounces over 7 kilometers, or 10% of the break. There is an intersection by Cominco Exploration, 6 kilometers south of the Con Mine, 8 grams over 8 meters, at 100 meters vertical elevation on our South Bell property. Look, you can if you have access to the best plumbing system in the existing mining camp with infrastructure, there's so much to go for it, because you just have to drill it. It's not like I question where I'm going to be drilling next. No, we're just going to need to attack systematically the Campbell Shear this year and the year after until we get 2 or 3 or 4 million ounces. Very simple. It's a definitive, obvious target to be drilled, untested.
Well, I think that's a good summary and a good place to leave the hour session. If anyone has any other questions, feel free to reach out and I can get those answered for you. Thank you both for joining us again. I hope to see you in a couple months, and I hope we're talking about 10 grams per ton over 10 meters at least. And yeah, thank you. And thank you everyone for joining the session. Have I missed anything, Dave?
No, I think it was all well covered. And, you know, as we proved over the last year and a half with Gerald being involved, you know, we aim to deliver. We're conservative with our statements, and, you know, we want to under promise and over deliver. So I feel that with this drill program, we're in position to keep on that track. So everybody pay attention closely if you can.
Yeah, one thing that we didn't highlight on this webinar that we usually talk about, but worth mentioning, is when Gerald joined, he's been buying stock in the market himself. How much stock do you currently own?
It's, for those who can afford Bloomberg, I can't. 5.25 million shares. All of them purchased through time.
So I think
in every financing we've done. And one on weakness, I'm always a buyer, but sometimes we're blacked out, so we cannot neither buy or sell. I'm a very happy shareholder of one of the best gold story in Canada in the making.
I think that summarizes it nicely, putting your money where your mouth is. Both, and yeah, I look forward to seeing the results in the coming weeks. So good luck and stay in touch.